Hello my friends, this is Doug Fabian. Welcome to my weekly ETF report, the video version. Today is Tuesday, October 14th, 2014. Thank you for joining me. The purpose of these videos is education, information, and motivation to get involved in the wonderful world of exchange-traded funds. Each week I bring you 3 topics, and I've done so again this week. Let's begin with one of the reasons why I believe ETFs are such a great investing tool. And the word I'm going to use to describe them is easy. Now, ETFs are easy to buy, they're easy to sell. You can do so just by having a brokerage account. But there's a subtle difference that I want you to understand relative to mutual funds. ETFs are easy to exit. The ease of exit, I think, is one of the biggest reasons why you should be adopting exchange-traded funds in your own investing endeavors. There's all kinds of roadblocks, psychologically and implemented by the mutual fund industry to, whoa, slow down, you don't want to sell your mutual funds. Where in the world of exchange-traded funds, nobody cares if you buy or sell. Certainly, they all want to build assets, but if you want to sell an exchange-traded fund, no one is going to stand in your way, and I think that that's a very important attribute. The second topic I want to talk about today is the general market, and we are in a mid-cycle correction. Now, what do I mean by that? We've been in a 5-year bull market since March of '09. Stocks have been trending higher over the long term. The last 3 years, there have been literally no stock market corrections. In the entire calendar year of 2013, there was one 5% correction. Well, right now, I'm sure you've heard the headlines and seen the numbers. Stocks have been extremely volatile. And this mid-cycle correction so far has been the most severe we've had in almost 3 years. Right now, stocks are down in the US on average about 7%. Now, I want to show you a table here. And in this table, I have assembled some ETFs to give you a feel for what's happening in the world and also with some specific sectors in the market. I only have 6 ETFs to share with you today. The first one is VTI. VTI represents the entire US stock market. Simple concept, index funds, all stocks traded in the United States. VTI has now corrected the amount of the percentage that it has declined is a little over 7%. But so far, VTI is still up on a year-to-date basis about 1%. Moving on to VT. VT is another Vanguard index ETF that represents all stocks in the world. And we look at VT, the correction's been a little bit deeper, almost 9%. And VT is also negative on a year-to-date basis. Now there's VWO, and VWO represents all the emerging markets like China and India and the Philippines. Those stocks have corrected a little bit more, about 10%, and they're now slightly negative on a year-to-date basis. Now, I wanted to look at a couple of sectors because there's certain portions of the market that have gone down more than others. And let's begin with energy. I'm looking at the ETF XLE. The XLE ETF is down 20% from its highs. So this particular sector of the market has gone down the most when we look at the broad sectors in the US. Then there is XLV. XLV represents healthcare. It's only corrected about 5.5%, and it's still up on a year-to-date basis. And then lastly, everybody is excited in the United States about technology. We're still a global leader in technology. Technology has corrected about 7% and is still up on a year-to-date basis. So my whole purpose today is to, number one, reinforce the simplicity of exchange-traded funds, the ease of exchange-traded funds, and give you a snapshot into certain areas of the market and how they've performed so far. Now, the last topic I want to discuss with you today is the concept of a trend break. And I have 2 charts to share with you. The first one is VTI, the Vanguard Total US Stock Market ETF. And as you can see from this chart, we have gone below the smooth red line, which represents the 200-day moving average. For us, Fabian followers, this represents a trend break. And matter of fact, last week in my ETF newsletter, Successful ETF Investing, we issued a sell signal on U.S. stocks because of this trend break. Now looking at the next chart, VT, you can see the trend break is a little bit deeper. And international stocks have been weaker than U.S. stocks, but international stocks are now below their 200-day average as well. So on a shorter term basis, we are poised for a correction. We've raised some cash in our portfolios. We've gotten more defensive. If you would like to get this kind of advice from us, you're certainly welcome to subscribe to Successful ETF Investing. You can visit our website, fabian.com, to sign up for a subscription. And I hope this weekly video and the commentary today helps you in your ETF investing endeavors. If you'd like to send me an email, you can do so. The email address is askdoug@dougfabian.com. Thank you.